Major global markets closed for Christmas holiday except the Middle East and Asia as Japan's Nikkei drops 5% on Christmas Day. Egypt expects IMF loan installment in January as talks delayed. Plus, we'll launch our year-end report with a review of Africa's economic growth in 2018 as well as the fashion industry. Merry Christmas and welcome to Business Incorporated. I'm Chimezi Ubi Iwago. Well, we'll get started with the markets, and most major world markets are closed for the Christmas holiday today. Here on the African continent, Egypt is the only one trading today, down 1.13% at intraday. The Nigerian stock market rallied heavily on Monday, up almost 4%, with traders cheering a Merry Christmas on the Christmas Eve trading. The South African JSE index was also up 1.27%. Kenya was not left out as the Nairobi Stock Exchange closed 1.38% higher ahead of Christmas. Meanwhile, the Middle East market traded today with the Saudi stock market down, pressured by sliding oil prices. But Riyadh Bank was one of the top gainers, hitting a 4-year high after announcing major talks with National Commercial Bank. All major Middle Eastern markets dropped on weak oil prices and tepid global sentiment. However, Dubai bucked the trend. The Saudi index was down 0.92%, pressured by its petrochemical shares, with Saudi Basic Industries Corporation losing 2% and Saudi Kayan Petrochemical shedding 2.9%. But Riyadh Bank jumped 5.2% to its highest level since November 2014, after saying that National Commercial Bank, the kingdom's biggest lender by assets, has begun discussions to merge with the firm. National Commercial Bank was down 0.2%. The Dubai index rose 0.28% a day after slumping to a 5-year low. The market has been hit hard by slumping real estate prices in the United Arab Emirates, as well as the economic slowdown in Saudi Arabia. Qatar's index slipped 1.29%, with Qatar National Bank, the Middle East and Africa's largest lender, falling 1.1%, and Islamic Bank Masraf Al Rayan sliding 1.9%. Abu Dhabi's main index slid 0.35%. First Abu Dhabi Bank, the largest bank in the United Arab Emirates, declined 1.3%, and Emirates Telecommunications Group was down 0.7%. And Japan's Nikkei retreated to a 20-month low today after a slide on Wall Street deepened with a series of unnerving U.S. political development. Well, the Nikkei share average ended the day down 5.01% at 19,155.74 after brushing 19,117.96, its lowest since late April 2017. The day's performance put the index well into bear market territory, off more than 20% since its October high. Japan's broader topics closed 4.88% lower at 1,415.55 after touching 1.412.90, its weakest since November 2016. In China, the Shanghai index, which had fallen more than 2% by midday, recorded a slump of less than 1% so far this year. The Shanghai stock index is down about 24%. Many financial markets in Asia, Europe, and North America are closed on Tuesday for Christmas holiday. All of the Tokyo Stock Exchange's 33 subsectors were in the red, led by precision machinery and pharmaceuticals. And U.S. stocks plunged on Monday in their worst day of Christmas Eve trading ever as the S&P 500 entered bear market. The Dow Jones Industrial Average dropped by 653 points in volatile trading, falling below 22,000. The Dow sank more than 2%, then recovered nearly all of the day's losses before again falling more than 2%. The S&P 500 fell 2.7%, slipping into a bear market as it fell 20.06% from recent highs. Wall Street traditionally considers a drop of 20% or more from recent highs to be a bear market. The Nasdaq Composite Index slid 2.2%. Now, markets responded to turmoil in Washington, multiple reports said President Donald Trump is discussing how to remove Jerome Powell from his position as chairman of the Federal Reserve. That discussion, as well as the recent market volatility, spurred Treasury Secretary Steven Mnuchin to call the leaders of the 6 largest U.S. banks over the weekend. Additionally, Defense Secretary James Mattis announced he would step down at the end of February, saying his views do not align with the president. Trump resumed his attack on the Fed on Monday, tweeting that the central bank is the only problem with the U.S. economy. And the global oil markets, U.S. crude futures ended Monday's session down $3.06, or about 6.7% at $42.53, the lowest closing price since June 21, 2017. At the session low, WTI came within about 30 cents of U.S. crude's 2017 low of $42.05. Brent fell 11% last week, while U.S. crude posted its worst weekly performance in nearly 3 years. The fourth quarter rout in oil markets is being fueled by concerns about growing oversupply in the market. Top producers, the United States, Russia, and Saudi Arabia, have pumped at record levels in recent months. Meanwhile, forecasters now say demand for oil will grow more slowly than previously anticipated in 2019. Financial strain in emerging markets, rising interest rates, and trade tensions are fueling fears of a slowdown in global economic growth, which would weigh on fuel consumption. OPEC and allies, led by Russia, agreed this month to cut oil production by 1.2 million barrels per day from January. In the metal market, gold scaled a 6-month peak on Monday as sliding stock markets and concerns about a global economic slowdown sapped risk sentiment, driving investors to seek safety in the precious metal. Spot gold gained 1% to $1,268 per ounce in thin trade ahead of the Christmas holiday. The metal hit its highest since late June at $1,267 earlier in the session. U.S. gold futures settled 13.70 higher at $1,271 per ounce. Among other metals, palladium rose 6% to $1,239 per ounce. Silver rose 1% to $14.74, while platinum fell 2% to $785.50 per ounce. And away from the markets, Egypt expects to receive the 5th installment of a $12 billion International Monetary Fund loan in January, a month later than initially scheduled, amid delays in talks over some elements of the government's economic program. Among the most important of the issues is the timing of the announcement about the fuel pricing mechanism, a step the IMF has insisted upon. The mechanism links local fuel prices to international ones and is a key part of the government's plans to cut costs. And sub-Saharan Africa's economic recovery will progress slowly into next year, even as analysts sound alarms over the rate at which some countries are taking on debt. There was also public outcry in several nations as their governments went hunting for additional revenue to meet developmental goals.
This great continent.
The process of integration.
The leaders of 44 African countries made history in March this year when they gathered in Rwanda's capital, Kigali, and endorsed the African Continental Free Trade Agreement, AfCFTA, a $3 trillion continental free trade zone that encompasses 1.2 billion people. Economists point to Africa's low level of intra-regional trade, which sits at just 15% of the total commerce, as one of the reasons for the continent's enduring poverty and lack of a strong manufacturing base.
If the African Continental Free Trade Area is to work, it's important that we see more manufacturing and agro-processing and processing generally in the continent. Otherwise, there's very little production to trade, with our neighboring countries.
Nigeria and South Africa, the two economies that normally push the continent into faster growth, are struggling to reclaim their potential, even though commodity prices have improved. Lower oil production in Nigeria offset higher oil prices, and in South Africa, weak household consumption growth was compounded by a contraction in agriculture. And although capital inflows to Africa have grown exponentially in recent years, but risks also exist. Because much of the increase has come from debt. The IMF reported this year that liability inflows ballooned from $3 billion in 2000 to $60 billion in 2017.
What we're concerned about is really the pace of increase rather than the level of debt on average. But what is worrisome is that in countries, particularly oil exporters, other natural commodity exporters, what we've seen is a pronounced increase in debt in the last couple of years. And there, of course, it reflects the big hit to their economies following the commodity price crash, the hit to revenue levels, the hit to their economies.
In addition to taking on unprecedented levels of debt, some African governments like Kenya, Zimbabwe and Somalia also hiked taxes in a bid, they all said, to fund a range of development goals. But food and fuel prices spiked and there was outcry from the proverbial man on the street, business commodities and civil societies. Analysts and charities urged governments to increase revenue instead by cracking down on graft and by taxing the richest more.
So taxing people more before you address these leakages, which are through corruption, mismanagement, will not help because they are still going to collect all the money. And then there'll be another headline. 3 months down the line, billions have disappeared.
Sudan has also had to watch its fortunes disappear. The country's economy has been struggling since the South ceded in 2011, taking with it 3/4 of previous oil output. The crisis deepened this year as a black market for US dollars effectively replaced the formal banking system after the Sudanese pound was devalued, making it difficult to import essential supplies.
The living condition in Sudan is getting worse. We have queues everywhere for fuel and at ATMs. You can't even pull your money out of the bank. You can't get your salary. Everything has become very expensive and we don't know what is happening. It feels like there's a ticking bomb and we don't know when it will explode.
While the Sudanese government fights to prevent economic collapse and civil disorder at the close of the year, the IMF predicts that most other African countries will fare better and could grow by about 3.8% in 2019.
16 oil and gas firms have submitted applications for one or more of 5 Ghanaian offshore blocks in the West African country's first exploration licensing round. The interest is a major vote of confidence in Ghana, which is keen to unlock more resources after it began pumping from its flagship offshore Jubilee field in 2010. The companies that have submitted applications are Tullow Oil, Total, ENI, Cayenne, Harmony Oil and Gas Corporation, ExxonMobil, CNOOC, Qatar Petroleum, BP Vital, Global Petroleum Group, Alka Energy, First E&P Cosmos, Sasol and Equinor. The applications include expressions of interest in competitive bidding for 3 blocks in the Western Basin and for direct negotiations regarding another 2 blocks offshore Ghana. A total of 60 applications were received, but 2 were invalidated as they were for a block reserved for Ghana National Petroleum Corporation. And Marsh, one of the world's largest insurance brokers and risk advisors, has launched a China desk in Dubai to benefit from growing commercial links between China, the Middle East, and Africa. The subsidiary of U.S. professional services firm Marsh & McLean Kors is the latest multinational to establish a China desk in Dubai, which is acting as a conduit for regional business emerging from China's Belt and Road Initiative. Marsh has picked up deals related to infrastructure projects since setting up the desk in the summer. Africa and the Middle East are an important part of Chinese President Xi Jinping's Belt and Road Initiative, a $126 billion plan to bolster a network of infrastructure connecting China by land and sea to Southeast Asia, Central Asia, the Middle East, Europe, and Africa. We'll take a break, and when we come back, we'll look at African fashion industry in 2018. Do stay with us.